Hey traders, Raghee here. Happy Thursday, everybody. Welcome to Charts and Coffee. Hope everyone's doing well. All right, so today is post-Powell. And partly I thought, well, could there be a bit of a post-Powell pullback? Now, if we think about the way in which Powell communicated the overall take on the economy, and a couple key lines that were edited and just flat out removed from the statement, I found everything yesterday to be really far more accommodative in tone than I was even expecting. I was hoping that we wouldn't see Powell overdo it, maybe even worse, try to, ratchet up the expectations for eventual taper and rate hikes. And instead, the market feels that, I think the way we're interpreting what we're seeing is the market figured, all right, there's plenty of headwinds out there. And we know that headwinds are going to keep the Federal Reserve from shortening the timeline to eventual action. And gosh, it's for the most part, those trends that have been heading higher, it's kind of onward and upward as far as I'm concerned. In other words, let's just stick with the trends, right? We don't need to make some sort of call about this is the precursor to something that we really don't have confirmation of. Yes, there are a lot of narratives swirling around out there. Yes, there's plenty of reason to think the market's extended and once again has started to borderline become parabolic. But this is the nature of the market through 2021. Let's focus on the trends in the NASDAQ and in the S&P. Let's even better focus on the relative outperforming sectors within those two strong indices. And that's what I'm going to continue to do. The pleasant surprise, look, yesterday in the Sector Secrets Master, we had our weekly live trading session. And I said, look, we have our position in GLD. We've had it for days. I mean, we've been in this market through all of just back and forth. And the back and forth has allowed us to get in. I gave everybody the option of an eject button. Eject buttons are getting out based not on price thresholds for our trade being broken, point of validity issues, or even the trade being invalid. None of those happened. It's still a valid long. It has been in the days since we called the trade and entered it. What we have now is finally the breakout. But yesterday I gave a lot of the traders an eject button, which is, hey, if you don't want to assume the uncertainty of the FOMC, go ahead and get out at a mild win or a mild loss and just call it a wash. Otherwise, let's see if the trade that we planned about a week ago is going to follow through. By the way, if you're not in and you're wondering, oh my gosh, have I missed this trade? Oh no, I don't believe so. Because two things are going to happen. One, we're either going to exhaust at this Darvis level that we have exhausted at before, and we're going to pull back, or we're going to break out, which is fine, maybe organize into a double green uptrend, in which case we can go about starting to buy the dips, which would be great. So that's what's on my radar here this morning, and let's kick off this episode with some questions. Oh, who better than Mr. James Harris? How you doing, buddy? Good morning. I wanted to set up a trade based on a weekly chart. Ooh, so looking at XLF on the weekly. So very rarely, James, I love the question, but let's set expectations about any candle that takes an entire week to form. First of all, the criteria, my friend, on a weekly is no different than what I would expect on a daily. Do I have a double green uptrend? I do. So I wouldn't call it a trade per se. If this is really a time horizon question relating to a time frame, what's the difference? Time horizon is how long do you anticipate being in the trade. Time frame is, of course, what that interval is on the chart. If I'm looking at a weekly, I really stop thinking about trades, quite frankly. And I'm thinking more about the early stages of building my portfolio, my investment book. So I'll give you an example, and hopefully this will help you. So in my portfolio, and you'll know this because We sent this out in those weekly macroeconomic updates that I send out to you guys in the Sector Secrets room and in the futures room for that matter. I said, look, IYT was something I was looking at to the upside. Nice double green, pull back into the wave. But that time horizon is months. So I don't look at the weekly for trades. I categorically think it leads to just a mess of a trade that may not look valid on the daily, but we can find, some sort of justification for holding on based on the weekly. I don't like to mix time frames in that manner. I like to day trade off that short term. You guys know if you took the day trading playbook class, 2 minute, 5 minute, I like to swing trade on a daily, and I like to set up my investments mostly on the daily, mostly on the weekly, sometimes using the daily, but mostly on the weekly. So, I would just say don't set up a trade on the weekly, set up investments, set up those longer term time horizon setups on the weekly. Just be careful. But yes, if you're looking at the double green pullback, yeah, it's valid. It's valid. Just don't think of it as a trade. For me, if I'm looking at a day trade, maybe, clearly just that session, maybe just the morning. Daily time frame, swing trade, days, usually 3 or 4 days to sometimes 3 or 4 weeks and beyond. That's sort of the duration, if you will. Now, on a weekly, now I'm talking investment type duration. So thanks for the question. And, feel free on the Wednesdays that we're together every week to, throw some of those weeklies in there where you're looking at some of these further out duration type setups. I mean, how far out am I going to expect with a weekly? I mean, I'm kind of looking at 6 months. 6 months usually is what I'm looking for. All right. Next up is, hey there, Francisco, thoughts on GS. All right. So Goldman Sachs. I don't love financials, and that's going to be partly the problem. And then let me take you on over to the multi. Let's do this here real quick. Let's open up the XLF. Let's take a look at that there. So what I'm doing is I'm bringing up a layout that is designed to give me a view of the sector, the tide, as I like to call it, and the individual boats. So the tide is kind of compressed. A lot of the larger boats heading lower. The boats that are looking good based on this layout are Morgan, American Express, SPGI. So where does Goldman fit in on all this? It's kind of looking sideways. Maybe a little bit better than XLF is on the whole. So if I was looking at a sort of fourth symbol, it would probably be, after the double green uptrends that you can see on this chart, it would probably be Goldman and then Wells Fargo. But that means that now I'm talking about the fourth and fifth best stock within the financials sector. So do I love it? No. Is it a little bit more neutral than some of the others that are dominated by red grab candles like PNC and JP Morgan and Bank of America? Yes. But, look, I don't love this sector. So I'd have to get down to an individual stock level, and I'm going to prioritize the double greens. So thoughts on Goldman is it's interesting, but not as interesting as the double greens within this group. So I hope that helps. Watch list building, gang, is probably the most important aspect of trading. It's more important than your indicators. Look, I call them secret squiggles, right? They're more important than your secret squiggles. They're more important than your strategy. And I know that sounds crazy, but as long as you are identifying a trend, preferably an uptrend, and you're not trying to pick a top, you're usually going to be fine. So pick an environment that is the most generous, high probability, more predictable environment. And then everything else, interestingly enough, tends to work better, right? And I think a lot of traders sometimes neglect that part of their watch list building process, or they just find stocks that everybody else is trading, or they find the sort of stock du jour of the month or the day, and they trade that, not ever stopping to ask, is this the best example of the kind of environment that I, meaning, you, me, individually do best in? So that presumes that but I think the easiest sort of generality is most of us, whether we're momentum traders, trend followers, day traders, most of us will do better. Our performance will be better in uptrends. So seek those out, prioritize those, and, humor me, if you will, for maybe a month or a quarter and focus on those. That's, by the way, exactly what we do in Sector Secrets. Every now and then we'll take a non-trending trade like gold, but gold did have a trend, the trend that we were actually capitalizing on, which has been in play, and why we positioned ourselves in the quiet sideways action so we could pay less for our GLD calls. The trend that we were capitalizing on was actually the downtrend in real yields, which should open the door for gold to move higher. But in terms of Goldman Sachs, Francisco, that's kind of the way I would look at it. And then Bill's question is a great follow-up. In all my years of trading, at this point, decades, right, Bill, are there always double greens? Yes. Remember, the market is, capital is always flowing. The capital does not go under the mattress. Very rarely are we going to presume that capital is going to go under the mattress. So if one market is losing its trend, that capital will flow somewhere else. We call that sector rotation. We call that rebalancing. We call that, so many things. But yes, there's always going to be something that's going to benefit from the current environment. That's the macroeconomic trend. We have the business cycles. We have just the market cycles that Dow identified and talked about 140 years ago. Something will benefit when something else is losing favor. That's really that Ferris wheel analogy that I use for sector rotation. So what's being neglected now, when at some point in the future, the large money now thinks it doesn't want to be involved at the higher highs, and it's going to put its capital to work somewhere else, it's usually going to go to places that were completely neglected. Think about the way in which tech rallied last year. There were two sectors that really did not benefit from much of the strength of that mid-year rally: energies and financials. And then when we finally saw some really significant rotation, what became the market on the rise, rallying to the top of the Ferris wheel, if you will, energies and financials. So yes, that's been now sometimes there's more than others. Clearly there were more in 2020 than 2021, but there are still plenty in 2021. Absolutely. There are always going to be, again, I can't say there'll be a lot, but there will always be double greens. Absolutely. So how many different mugs? Now we're getting to the really, really, really important questions here. How many different mugs do I have? A lot. I have a thing for coffee mugs. I do. If I had my way, we wouldn't even have glasses in the house. I have a thing for coffee mugs. Probably somewhere north of a dozen. Yeah, I have a lot. So I just like them. I pour everything in them. Important questions here. Long coffee mug. If there were coffee mug futures, I'd tell y'all, diamond hands. All right. So next up is crazy overnight GLD SLV. Any insight into that? Daniel, yeah, we've been long. Again, for the aforementioned reasons. So for sure, I think ultimately, let me get back to my charts here. I think ultimately what we have to remember is that gold already created a 1, 2, 3 trend reversal back in March, April. Then it had that really nice uptrend. Then it pulled back, but it still had bullish directional bias because the trend that preceded the chop was up, right? So now we have this kind of choppy mess. We didn't come back down to retest 1765 to 1760, which would have been a great fade. So the next level that we had to work with was around really 1800 to about 1790. And that's where we set this up. Not an awesome trade. I'm just looking for a little bit of movement higher based on that low of the range. Again, yesterday could have been, post yesterday, we could have seen a far different result than we ultimately did. But what's my insight? It's the same reasoning that I have been talking about the long and being bullish in gold for the better part of a month. And that is the consistent drop in real yields. And then really we needed the US dollar to sort of disconnect from a correlation standpoint from gold, which it has incrementally. I think the correlation now between gold and the dollar is nearly half what it was when gold was struggling to move higher. So that dollar getting out of the way, US dollar sure did help. All right, next question is, hey there, Andre, sorry. I got into Costco, okay. 386, nice. An XLV at 121. The 386, that's a nice trade. Sold Costco at 415. What are my rules for selling? And okay. So exits. How do we exit a market? It's funny. It's a great question. Andres, great question. I was just talking about exits this morning with Trish. I was texting with her and I was talking about our perfect exits class way back when. Maybe it's time to sort of bring that back and discuss what it means to exit a market, because so much of what we do and study as traders is, when do we get in? How do we get in? What are the secret squiggles that get us in, but not out, right? And we really only pay ourselves, as you did very nicely, by the way, nice stuff, when we get out. So what are my rules? Okay, so guidelines and letting a winner run. So first of all, letting a winner run presumes that we're in the kind of environment that means overall that we have the ability to run higher. So a double green is going to give us a better environment for that. In other words, if it's not double green, I shouldn't presume that it's going to run. So structure, go back to structure almost every time. So if you're in Costco from there and XLV, okay, same thing. Double green, this is, when we're going to talk about letting a winner run, we want to be in the optimal environment for it. So you're in both that position on the daily time frame of Costco and healthcare. Awesome. So the other part of it is this. I don't know where a market's going to turn around. I'm going to presume that a trending double green market's going to have a better chance of continuing, but we need to be proactive about paying ourselves, which means that there are going to be predefined levels, at least two, target 1, target 2, that allow us to take profits while we can, not when we have to. What do I mean by that? Profit taking shouldn't be, oh, wow, the market's going higher and higher and higher. Oh my gosh, it's turning around. Get out now. Everybody's thinking that. And if you're in an option position, it's going to be even worse, because that bearish momentum is not going to give you any kind of advantageous environment to liquidate with the bullish momentum when you have calls. So I don't mind leaving a little bit on the table. The idea that I'm going to pick the very bottom and very top is something that I abandoned a long time ago. So, I might believe in Santa Claus, but I do not believe in top and bottom picking. So one is possibly true. The other one's a complete falsehood. So anyway, what I want to remember is that environment first, we've got to have the probability for it to be able to run. And second is pay yourself while you can, not when you have to. And you're right, exits are so very important. And those are two very general guidelines that we use in the mastery. And by the way, on Monday, I've got a webinar coming up. So if some of these topics are interesting to you, you want to deep dive a little bit more, this Monday, 8 p.m. Eastern, you can register at simplertrading.com/scale. All right. So Win, how you doing? Good sector secrets session yesterday. Learned a lot. Love it. Let me see here. Let's see. Mike says, show some love and hit the like button. Very cool. No, I appreciate that, Mike. Very kind of you. I love it. I love it. Okay. So, hey, gang, just like that, Charts and Coffee is, I'm going to call it a wrap here. It's 9:20. Head on over to your respective rooms. And I'll see you tomorrow. Same time, same station. Thanks as always for being part of the caffeinated Charts and Coffee crew. I'll see you tomorrow. Be good to each other.